Greetings, Jedi traders. David here of Trading Fibs to bring you the technical momentum outlook for week 41, starting here October 8th, 2017, as we are into the first week of Q4. Hey, Jedi traders, as always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, let's get rolling here. Week 41, just about to start here in a couple of hours as the market will open up here on Globex Sunday. Monday here is a bank holiday. Markets still will be open as the markets get started here after an amazing week 40. As you can catch the recap here again on Fridays, getting the recap in for the week, highlight of the charts, ETFs, and focusing on the futures here on Sunday as we roll out the week. And in the coming week, or next couple of weeks, I'll be focusing on actually a weekly or perhaps bi-monthly ETF recap, and you can catch that here on the ETF page. I will let you know more about that as I get that rolling out. All right, let's jump right into the key charts here as we did on the recap on Friday, just seeing where we were in week 40 as price action had an incredible lift throughout the week to finish out week 40 here at the all-time highs as the RTY really led off the week and consolidated here as a technical trend right now on the NQ, catching up throughout the week, and the YM pulling back just slightly with the ES there on Friday when it came to the end of the week with just minimal volume really under the 60-period moving average, so keep that in mind. All right, so indices momentum closes above the weekly open, closing out near the all-time highs as that YM really, if you look at the charts here, you can see the YM really lifting throughout the week and driving the rest of the market up as we'll be headed into Q4 seasons coming up. VIX levels holds in the mid-9s. Taking a look at our FANG actually adding a couple A's there now, Avgo and Adobe there. So whatever the acronym may be, Amazon catching up and lifting above its 50-day period moving average on a daily chart. So momentum back upside, but again, as I had written about last week, all eyes on the short interest buildup on the FANG stocks, either way you want to look at it. And but as Q4 season's rolling out, that's something we'll have all eyes on as well. We still have momentum as we closed out last week on the total stock market index ETF, still in trend to the upside. Again, even though we hit the MML resistance up here, 131.25, that still leaves a little bit of room, but all eyes on the fact that we have three levels. We got a 60-minute, hourly, 4-hour, and the bigger picture all the way back here to May, triple resistance here on the market index. So momentum clearly still stays to the upside. We're above the key moving averages. Momentum still in the green. So I got to go with momentum still to the upside until we get a little bit higher and start pulling back down. I got to go with the momentum still upside on the total stock market and also dollar index as well. We talked about getting that short-term pullback. So I still have to go with obviously we have a nice short-term pullback on the dollar ETF here. Again, with some resistance until I get a confirmation below back underneath that 24.22. I got to go with a confirmed pullback that's going to hold here on the dollar index. Also, FFTY, IBD, ETF, fundamentals, strong stocks in the market. Following on the ETF, gets a nice breakout here. We got up to 32.62. Again, shorter term frame during the week. Obviously, be ready in both directions. But bigger picture, opportunity to move the stops up, either here 30.47 or even higher as the ETF still holding to the upside. So momentum clearly in a strong trend on the ETF. So again, that gives me the big picture that the market's still strong to the upside, even though we can always get small corrections back downside. But as long as you got your stop somewhere below that, it's some given distance, confirmation still in the uptrend all around in the market. Again, October Perma Bears still salivating at the fact that markets might pull back at some, but we'll go ahead and wrap up with that at the end. So current IBD outlook still in a confirmed uptrend, and so let's get into the charts and then see what's ahead for the week. Let's take a look at the Russell here as price action on the Russell. So I like to start again with the bigger picture on the weekly. As we can see, we've been driving from the MML lows down here around 1375 as the Russell RTY becomes the major staple as it pulls away from the TF, from the ICE exchange, as we're going to start rolling here into 2018 and getting away from that TF Russell. So we really should see an increase in volume there. But anyway, either way, direction is trend. It's tradable. Price action has lifted. So you got the weekly picture. You take the daily. You look for points of pullback to splice into the weekly. So here you can see we're back here in August. Almost the same picture as the daily's been running up. So you're holding upside as price action pulled above 1437.50. Perhaps you're following an ETF on the IWM. Price action gets up here to the resistance upside. So again, we still have room to get up here to 1546.9, but on the smaller time frame, yet larger for the week. We could see here in week 40, we did a lot of consolidation after that. Let's go back to the daily gap as we saw the Russell here. There it is, Russell lifting to the upside here and consolidating sideways. So there you go. That's your picture there, and that consolidation is obviously chopping in between those two short-term MMLs here, between the overbought, between the two resistance and support levels. So any breakout upside, we'll be looking again to that bigger picture, 1546.9. Temporary would be up to here, 1523.4. If price action loses support here at the resistance around 1500 and the 10 EMA, we'll start looking down here to 1468.8. All right, looking at price action on the NQ. NQ, same picture, short-term MMLs up at the high. Look at the bigger picture. We still have room to get up here, 62.50 all the way up to 67.18 on the bigger picture, which is the NQ that's been in a trend ever since the market lifted up here back in November and post-election. So we got room to move up. Daily, definitely at the highs up here on the reversal, as the daily will obviously show a little bit more noise on the charts, as we can see here, price action consolidating. But regardless, the question is, what now? What now? When is that turnaround going to be? And obviously, we're not at it, as we can see here on the range charts. NQ holding above the 10-period moving average, well above the 50, above the major support resistance. So as long as we're holding up here at the highs, we continue to push higher. We'll be looking at 62.50 on the bigger MML pick. Anything downtrend, we're using the hike and Ashi bars. We're looking for the crossover of the 534 and the 5144 to the downside. We'll be looking under 60.1575 for any pullback, but until that happens, I got to go with the confirmed uptrend. Taking a look at the YM again, we've already hit the resistance MMLs. As I mentioned, the trend is still upside at the MML highs, but YM holding up here within the zone up to 969, even higher, 24,375 if we're to hit those levels. But as long as that daily and that range chart still holding upside, at least above the 10 EMA, again, the range chart is a way for you to splice in the daily ability to splice into the weekly, and therefore a great tool to use with the ETS. But as far as an intraday trader, you might obviously want to trade both directions sometimes, opportunities on the MMLs, but bigger time frame. That's the goal of this outlook, is to tell you where that trend is, and current technical momentum trend still sitting upside, though. Keep in mind that if we hold with resistance here in week 41, back downside below 656, we'll be looking to the halfway point, 22,500, and even lower at 344. Taking a look at the ES big picture again, we've talked about as we wrapped up week 40, we're still in this complete uptrend that's been solid here as we start Q4. And taking a look at the daily versus weekly, we can see again we're at the short-term MMLs as we break out on the longer term. So we still obviously always have a projection for whether it's Fibonacci or whether you're using MMLs to give you some levels upside. So the key is watching on the watching on the range charts. The range charts give you an opportunity to splice into that daily chart as we hold up here weekly in that 11-month uptrend to the MML high. So we have all the way up here to 2617 that we talk about. Earlier level we'll be watching is 2568. But we're going to look for that consolidation here. As we know, we've closed out a downside doji indecision bar on the ES. And so here we are at the MML levels high. So what you want to watch for is the break below 2539. If we get a solid entry, markets are trending down. Starting week 41, we'll be looking down to the 10 EMA and the major support resistance first, 2519. There's your levels downside on a 20-tick chart. All right, taking a look and wrapping up with our crude and our gold. Again, we saw the energy sector in the recap from Friday. Price action on the crude really taking a hard hit. It's hard to get a solid grasp. You think we're going up. We hit into the 50s. Actually, the long-term number I'm looking up here is to 56.25 off the MML lows on the weekly. So that's my bigger level that I'm looking at upside here. Now, if we're unable to hold up here, we'll obviously be looking back down to 43.75. That gives you a great intraday trend. But as far as bigger picture, I'm still looking up here to 56.25, and this is what concerned me on the daily for the last maybe week and a half. As price action hit up to this reversal, we've been really struggling on the crude on a larger time frame to get up to that MML high. And so we could see on the daily, we absolutely hit the reversal, but the MML did not get up there. So price action back underneath the 10, still holding above the 50 and the 200. If crude, which we have the OPEC monthly report, energy numbers coming out on Thursday this week. So if numbers turn out the way we want them and trend might resume, then price action again, we'd be looking back up here to 53.13, which would probably give us maybe back up to these MML highs in the daily and maybe a move back to up here to 56.25. So right now, currently trend definitely to the downtrend, but with support down here, down to 48.63. I'd watch these levels here. If we can get back above the 10, here's your zone up here, 50.78 to 51.56. Break out of 51.56, we'll start looking at 53.13. All right, and last but not least, GC gold, which has been in a downtrend now here for a couple weeks. Again, bigger picture. Take a look at the weekly. We got up to that reversal. We turned around, break under 13.12.5 as price action was again unable. Similar here, picture unable to get up to the highs here on the MMLs up to 13.75. Gold pulls back, so we'll be looking to support here down at 12.50. If we hold here at 12.50 back upside, we'll be looking to that 13.12.50, which would show us that level here, major support resistance, also the resistance on the weekly. Anything higher, we'll be looking back up to 13.75. But again, I want to watch this zone here. This is the MML lows, so that gives me some hope that maybe gold will hold here, especially the bounce up to 200 SMA. Anything lower, 12.53.9, but unfortunately right now, current trend, I got to go with the momentum downside on the gold. If we can hold here and break back upside, at least on a crossover of one of the horizontal bars here, which would be the 534. And we'd be looking up here and all the way up to 13.43.8. All right, Jedi traders, like I said, intraday setup. Let's go back to the NQ. Again, we're looking, we know the bigger picture. We know 62.50 is the MML high. We know currently trend on the daily will probably reset. We have a current trend on the higher picture. And so when we're looking for intraday setups, well, I do not have an NQ here, but again, similar picture, RTY NQ. We're looking for an intraday trend as we see here on the crude. I got a crude chart. I got several charts here, but again, same idea. This is just a smaller time frame. We just take the smaller time frame, we apply it to the higher time frame. We're looking for a strategy that puts us in the trend. The most basic indicator is the bar itself. The solid Heiken Ashi bar trending up is an easy way versus trying to read candlesticks, as we can see here in this chart. Trying to define all these different patterns versus the HA bars tells me one simple thing: which direction and trend am I going? So I use the combination of the T3 moving averages, I use the 534, I use the 5144. Those are my moving averages. The combination of all those, holding all above that, maybe even on the VWAP, volume weighted average price. And there you go. You got yourself an MML low, an MML high, and you got yourself a midway point, a 50% Fibonacci level as well. So All those put you in the trend, ability to splice into the bigger picture. But again, intraday, you need to be ready in both directions. Bigger picture, we still want to know where's the trend. And right now, I still got to go with technical momentum probability, still in an uptrend on all the indices here, excluding the CL and the GC. As October, as I mentioned, perma bears still wetting their lips, hoping that they're going to get a pullback in this market. Again, you read the news, you hear the watch the Twitter feed. Again, just questioning: is this it? Is this it? And this it? And it just keeps pulling back. It just keeps driving up, and that's where the momentum currently holds the strongest. All right, looking ahead. All right, so those are the charts, Jedi traders. Keep your eyes on them. Always be ready, both directions intraday. But bigger picture, you know where the current trend is as we roll into week 41. Taking a look at the econ calendar here, rolling into week 41, we have a somewhat quiet Monday as far as being Columbus Day here. Markets still will be open. Highlights this week: FOMC minutes. We have earnings coming out. We have CPI also on the end of the week on Friday, so keep your eyes on that. Retail sales reports here on Friday as well. Domino's and BlackRock with earnings out this week of highlights, and the U.S. Army annual conference. So sure to be talking about defense there as well. All right, so those are our key events. Global, we'll be looking at merchandise balance in China's Singapore, and I forgot what the other country is, but keep your heads up on that. All right, that is a wrap. Again, check out the weekly recap. Technical Momentum Outlook will be posted here momentarily. Again, if I haven't covered anything, I'm sure to cover it during the week. Hope you guys can appreciate the bigger picture, the momentum outlook, and then intraday is a whole different story, a whole different bag of bones there. Again, you can take the current big picture on the futures. You can apply them to ETFs. That's something I've been working on for a while now, still working on that to make that hopefully useful to all of you as well. And we'll be starting that video just on the ETFs, as I do cover some of that on Friday's video, but I will be making a separate video in the future to cover just those markets that I am watching. All right, Jedi traders, that covers it for this week for the 41 recap. If 41 outlook. If any of you want to visit more information, check out my website here at tradingfibs.com or any of my social media outlets to obtain more information. My mantra: one market, one simple strategy, any time frame will keep you disciplined. You can always find me here on Twitter at Trading Fibs, and you can keep updated throughout the week. As always, I leave the crystal ball to the experts. I'm only trading the charts that are in front of me, and I leave my bias at the door when trading. Hey, if you're interested in joining us, like-minded traders, a lot of great input into the trading room here. You can join us any week. Let me know for a couple days, perhaps on Thursday or Friday, to view the live charts as they happen. Just go ahead and email me, David at Trading Fibs. Hey, a shout out this week, by the way, if you're interested, by the way, in learning more about Murray math levels. Not only am I did this one video here, I got another one of my traders in a room. I'll go ahead and talk about that in the upcoming webinar, which is right here this week, October 10th, using Murray math levels in your trading for the live trading challenge with Infinity Futures. I'll be talking about Murray math levels, how you can apply that in your trading, plus some other tutorials that might help you out as well. All right, also heading out of or heading into week 41, congratulations here to the Bank of America Chicago Marathoner. There it is, Galen Rupp. Haven't had a winner there in over 10 years, I believe, and actually from Portland, Oregon. And actually there's a marathon here in Oregon today, the Portland Marathon. So there you go, a native Portland native running in a different, actually my home state there, or home city in Chicago, they're running there. So congratulations to Galen, also an Olympic winner. All right, exciting as we roll into Q4. It's fall out there, so enjoy the weather. Watch the leaves change color. Until then, have yourselves a Blue Zone day wherever you may be. My name is David at Trading Fibs. Make sure to follow me on Twitter in case I forgot anything here in this Outlook. Have yourselves a Blue Zone day. Have yourselves a good day. Have yourselves a good night, and good trading to you.